We talk about crypto, we talk about artificial intelligence, and we talk about the technology mix that makes our financial universe go round in the 21st century. Today's episode is actually on crypto, and we are talking today about crypto investing in turbulent times, the why and the how. I want to welcome back Markus Lehner of Lehner Investments on the show today. Last time we spoke about AI specifically, and I would encourage you to go back to watch this episode and learn something. And also today on the show is Dustin Lemblin, and he is also with the Lehner investment team in Frankfurt. He has a degree in applied mathematics, and you would probably describe him as a quant in the financial world. Those mysterious creatures that have made Wall Street headlines and movie titles. Markus, the crypto markets have taken a big hit in the first and second quarters of 2022. We had this whole event that's almost historic, like the depeg of the Terra USD stablecoin. We had Tether taking a hit. So there's a lot of nervousness in the system. Bitcoin took a big dive, under 30K in the first 3 weeks of Q2. What's your big picture? You're a big picture guy. You're not stressed by little fluctuations. So what's your whole picture of the market? And then afterwards, I want to also know why you're in crypto. What drives you there?
To answer your question, yes, I look at the big picture, of course, and digital currencies are not here to disappear. They're here to stay. And if you look at the big picture in everyday's life, and that's what all of us see every day, then you will realize that electronic payments, they are not the future. Electronic payments, they are here today. I don't know, but if you travel outside the EU, you will see you don't need to change any currencies anymore. Wherever you go, it's electronic. Wherever you go with your phone or with your credit card, it goes beep, 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 beep. So I cannot remember when I have last changed currencies because of traveling purposes. So everything is happening already electronically. But the question is, of course, which currency will survive in the next 5 to 10 years. But there's no doubt for me that digital assets are here to stay. Also, when you look at the size and the momentum they have got, as you mentioned, the big picture. Look, in January 2020, we had about 100 billion total assets in the world in digital assets. It was 98 billion to be precise. 1 year later, in January 21, 1 year later, it was 1.2 trillion. So 12x in 1 year. So this is a size which will not disappear. Of course, there's volatility, but as you might know, we are in this business since more than 30 years, and we've seen that in other markets as well. Look at the stock market. We've seen volatilities. On the long picture, definitely they will stay here. And this is for sure a serious asset class, and this is something everybody has to consider if you want to diversify your portfolio.
So it is also for the long-term investor, and I think it's really starting to be, and you're confirming this, it's being taken seriously, right, in the investment world. It's no longer this kind of trend that people are kind of doing, and bankers were joking about it. They said if you're in 2016, when you talked about Bitcoin, you got fired, and in 2021, if you didn't talk about Bitcoin, you got fired. So it has changed, right? In this sense.
The example is very good because we've seen this kind of disruption already several times in history. I like this example with horse couches. You think about 110, 120 years ago, everybody was riding with horse couches with 2 horses. And if you were rich, you had maybe 4 or even 6 horses. And then somebody suddenly came up with the idea, let's produce cars. And everybody said, they're stinking, they're dangerous. Where should we get the fuel from? All this resistance at the time it was. And if I look today at the streets, I don't see many horse couches anymore. Right? So they're only cars who took over. And I think the interesting part, and this is what you just referred to, is it was not the same companies who produced the horse couches who then produced the cars. It's a completely disruptive market, right? So they're completely new companies coming up. And it's the same in the digital asset space. If you think about names, the biggest players already today, like Binance, Coinbase, where have they been 5, 6, 10 years ago? Nobody knew them. So they're completely new companies coming out, and it's a big disruption. And this, again, is here to stay and not to disappear or fade away anytime again.
As asset managers. What is your product for crypto? Is it direct investment with custodial wallets? Is it funds? And what does that strategy look like?
We are from the investment fund industry. As mentioned, we are doing investment funds since more than 30 years. And the solution to the volatility is, in any market, diversification, right? So don't buy one Bitcoin and wait what's happening. Diversify yourself. Now, the best possibility in any asset class, or in most of the asset classes, to diversify is always buying an investment fund, because you have a regulated product with an IC number, you just put it in your account. And it's the same for crypto. So the best you can do is buy an investment fund with a basket of cryptos. Just be careful that you really invest into cryptos, because at the moment, crypto and also artificial intelligence is very much used for marketing. And many people say, we're doing AI. And the truth is, they are maybe investing in AI, but not with AI. And the same with crypto. Many people speak about cryptos and they are not really investing in cryptos directly. For any investor, no matter if with us or with other providers, it's very important that you really look closely, that you really go into the cryptocurrencies, that you really invest into the currency as such, and not into some companies who are remotely related to cryptos. I definitely believe that the best investment vehicle you can find with us or anywhere else is an investment fund, for many reasons: the diversification, regulation, volatility reduction. Also for the issues we hear many times about hacking and losing your codes. All these kind of issues are not anymore an issue if you just buy an investment fund which is investing in cryptocurrencies.
Great points, Markus. And I think the questions that people have really in this area is, especially first-time investors, they're nervous about this. They know that they want to do it. Even they understand what you guys said about why you would want to be in crypto, but they don't really know how to handle it, right? Because obviously the whole mantra of decentralization, et cetera, is wonderful until you realize that you actually taking the entire responsibility for keeping your assets, right? And then the question of, could you please keep this for me? But then you start having problems with custody and so on, right?
This is exactly the reason why today, as we're speaking, something happened and still happens, which didn't happen before in the investment industry, which is that small investors, retail investors, can do something that big investors cannot do. A small investor, let's say somebody living in an emerging market, can take his iPhone 3 or maybe 4 if he's a bit more advanced, and download an app of Binance, Kraken, Coinbase, you name it, and trade $10 on his iPhone, right? But a big institution, let's say Deutsche Bank, they cannot just download an app and trade 100 million. Yeah. So we are just in the forefront of big investors, institutional investors, semi-institutional investors, family office coming into the market. And all those investors, they all need regulated products. They cannot just trade with an app on the iPhone. And that's exactly the bridge we want to make. We want to make the bridge between the classical investment products, as said, with an IC number, and going into crypto directly. This is, I think, a very important point. And then I'm sure by the time all the big investors will come as well, because they have the possibilities.
What you mentioned with the ISIN number, that means that, this is a bankable asset, right? And you're not really, in that sense, you're not changing the paradigm for your investment strategies. This is a process that will change. Is that what you're seeing as well? Towards more native crypto asset investing, as the infrastructure kind of starts to catch up to actually do that directly, also for institutional investors? Or do you see like the fund to stay for the very long term? What's your feeling there?
An investment fund as an investment vehicle generally is a very, very good vehicle, because you have everything you need from a regulatory side, from a security side, if I may call it like this. And the only, I don't want to call it downside, but the only thing which has to improve is that the regulators around the world have to adapt, because we are really merging here two different worlds. We have the classical investment world with regulators in different countries, and we have on the other side the digital space, right, which is enormously growing. And to bring those together is not an overnight action, right? So the regulators from the old classical investment world have to see how they regulate investments into digital asset space. But it's happening more and more. And for example, BaFin in Germany is very much at hand. Liechtenstein has a regulation, and they're all coming up sooner or later. So I think in 3 to 5 years from now, we will be able to have investments in cryptocurrencies and other digital assets, like we have thousands of investment funds now investing in the equity market.
Yeah, absolutely. No, I think this sort of harmonization will happen on the back end of sort of the actual markets, right?
Can you tell us more about your investment strategy?
We offer the possibility for our investors to invest directly in cryptocurrencies. So the objective, really, the investment philosophy is to offer a long-term exposure to the broad crypto market to our clients. So we give them the possibility to invest in also like all the growing industries that are built on top of crypto. So for example, Web3, the metaverse, NFTs, DeFi, all this industry. And for that, we build a diversified portfolio of cryptocurrencies, and we use AI to build this portfolio. And we have two layers of AI machine learning application, both at the same time at the level of the selection of the cryptocurrencies and also how we construct the portfolio.
You talked about AI before in our previous episode and how the models are trained and all of that. In crypto, do you have like other inputs? Like, is it also sentiment based there, or are there other inputs that, or is it different from, let's say, more classic instruments?
I would say the main difference with this product is the fact that we use on-chain data. So this is really like the beauty of crypto. This is this underlying technology that we have with the blockchain, where all the transactions are directly recorded into the ledger. So we have access to a large amount of information. We are talking about hundreds of indicators, over 100 of cryptocurrencies for the last 5 years. So it's millions of data points. And obviously, it cannot be processed by simple human beings. So that's why the use of AI in that context makes a lot of sense. Yeah. And what we do is that we extract the information from the blockchain. So that's what we call on-chain data. And we feed this information to our algorithm. And with the on-chain data, we can really analyze the behavior of market participants. Who is buying? Who is selling? Are they young market participants? Are they experienced traders? Are they whales? We can also see where the coins are moving. Are they moving on exchanges, out of exchanges? What's the level of activity on the network, the network effect, etc. So all this information can be used as an input of our machine learning algorithm that can help us detect the cryptocurrencies that have the highest priority of outperforming the market. Because the machine learning is really good at identifying past patterns and also identifying variables that will be very good for future price movement. And it really helps us make predictions like that.
Okay. So in this case, what I find interesting here, just to kind of follow up on this real quick, you're talking about behaviors, right? Like you track the whales, and in our environment, there's a lot of the kids, if I may say, writing those scripts, right? And they're kind of doing that kind of stuff on a very sort of individual level. They're exchanging the little scripts and all of that down to, hunting down individual NFTs and so on. So it's a huge field. In terms of AI, are you also, in this case, are you still using supervised learning, or are you using like deep learning in the sense that the system kind of finds its own patterns and what to look for?
We use both. For example, the case that I previously mentioned about the being able to find the cryptocurrencies that's going to outperform the market is essentially based on supervised learning. But we also use unsupervised machine learning, such as clustering, more at the portfolio construction level. One example that I can give you is everybody said the whole crypto market is completely correlated, but that's only partially true. Because if we use some unsupervised machine learning, like clustering, for example, the algorithm can naturally pool some cluster of returns. So it will naturally identify who are the DeFi players, who are the metaverse players, like Axie Infinity, the Decentraland, who are the digital payment, like Stellar Lumens, and you will identify pockets of return. And this type of unsupervised machine learning algorithm is very useful at the portfolio construction level, because this is how we're going to be able to inject some diversification within the portfolio, for example. So that's another example of two types, I would say, of machine learning algorithm they use, obviously the supervised one and the unsupervised one on the portfolio construction level.
As we mentioned before, and also in our first episode, all our investment decisions are made based on AI, right? So in our fund management, we have no fund manager. We have nobody looking at Bloomberg or reading Financial Times or looking at annual reports. Everything is done based on AI. And because I think we built up a little knowledge and reputation in this space, it was actually our investors who approached us and said, look, you guys, you have to go and create an investment fund investing into cryptos, because your sentiment-based investment decision is so much better with cryptos because there's so much more information out there. I mean, there's a lot. I mean, think only about the communities. I mean, how many community members each coin, each token has out there. Compare it with the classical community of, let's say, Adidas, Allianz, or L'Oreal. So there's much more information out there. So we can really play the cards with AI much better than we could have done it with equities. Or we're actually doing it with equities, even if the results are good with equities, right? Yeah, I mentioned our German equity fund really makes good performance, beats the market. But in crypto, there's so much more information out there, which ideally is processed with AI. So this is rounding up the picture perfectly well.
Amazing. I mean, it really blows my mind that we're only now like talking about this. And are you going to conferences and are you publishing stuff about this, or is this something you want to keep this a little bit under the radar in a way? Because I mean, I think it's pretty, it's genius, right?
Well, at the end of the day, it is genius when it's there in the sense of saying, okay, logic, an investment fund investing into cryptos managed by AI, when it's done, then everyone says, what else, right? But at the beginning, to go to this way and to think about it, it takes some time, regulator side, technical side, getting the crew together. It took us years, but we are there now today. And again, to answer your question, yes, I do go to conferences. And I do go to investment summits and the likes. I don't want to speak too much about us and Lena Investments, but the general trend, when I started to do speeches and panel discussions on conferences, there was all kinds of subjects. Then about 5 to 7 years ago, it started a lot to go in the AI direction. When people who are involved in the investment industry, they started to think about what can we do with AI. Now, today, AI is almost a given in the investment industry. And most of the people at least use partly AI. There are not many using it fully like we do from research to execution, but AI is already a given on the conferences. And what I feel in the last year or two is that digital assets and crypto investments is such a big subject now. I mean, there was recently a big conference, which was a pure plain vanilla investment conference, but it was like 60% of speeches, presentations, panel discussions was about artificial intelligence combined with cryptocurrencies, combined with digital assets. So now the awareness is coming really big. And that's why also the regulator now really start to move,
Marcus, something I'm very curious about is digital assets as investment. So this is either NFTs or in the metaverse, like actual assets that are quite high value. What is your view on that? How do you see these digital assets as investments?
If you speak about the market, and I think we're making here a presentation, an episode about cryptocurrencies as of today. And for sure, metaverse, NFTs, and all the derivatives coming out of that is a very big subject, which is coming as in the next wave. The first wave right now, as we feel it, which is already here, is cryptocurrencies as such. And we don't want to overstress investors already speaking about NFTs now and metaverse and buying land, which is all virtual. For sure, you're absolutely right with this question, and it will come, but it will take some time. Already, it's not always easy to convince people that cryptos are here to stay, and this is the right time to invest in cryptos, and this is the right time to consider them and accept them as an asset class. This already needs a lot of talking and work, but we're moving on pretty well and pretty fast. So we did not focus so much at the moment to speak about the next few steps in the future. But you're absolutely right with your question. This is about to come. This is the next thing that will come.
If adoptions keep growing, as we are seeing from institutions and professionals getting into the space, well, we can definitely imagine even asset managers and portfolio managers allocating a small portion of their portfolio in NFT. I mean, from private clients, I think this is already somehow happening. People do not only own stocks, bonds, and real estate. They own, for example, cars and watches and painting. And this new generation is very keen to invest in the digital space. And for them, the NFT is also like a status symbol. So having in the wallet a Bored Ape or a CryptoPunk is like having, for the previous generation, Picasso or Rolex, So I think it will take some time, but definitely the new generation will be more keen to invest in this space and have a small portion of their portfolio allocated to it, definitely.
I completely agree. I think that's something that's so exciting about being in this space, is looking at the possibility and the potential of using digital assets that are of high value. So it's not just a link to a JPEG. You're actually investing in metaverse architecture, for example, or paintings, for example. You mentioned Picasso. There's movement to kind of make that investable with non-fungible tokens. So it's a really exciting time to invest, I think, from the investor side.
For sure.
Yeah.
Yeah, and also and you then going into financial products, right? I mean, you're talking about being able to lend against, let's say, those assets, right? You're starting to have those kinds of possibilities, and so yeah, this is coming, and as Marcus said, this is the next wave as well. And I'm curious to see how this will. I mean, you're doing on-chain analysis, basically, also of those assets, of course. And I think you can, at Lehner, I think what you can do is, of course, to give more trust, I guess, to also investors, because you can actually back this up. It's not just like, I feel that is what it is, like as my impression, but you can back it up with some data, right?
That will be the second step, I feel, in the space. We see a lot of on-chain data. I studied a lot with Bitcoin. Now it's going in every single cryptocurrencies. And the NFT market for on-chain analysis is completely untapped. In a sense, when I say on-chain data, I'm referring more about the volume and who are the whales, what are they buying? Because there's also like a bad side of it, with a lot of influencers trying like to pump some project. But there's actually also a lot of people that are very keen to invest over the very long term, thinking about people like Gary Vee and all these people, and being able to follow what these people are doing on their wallet is also like a very smart way, I would say, like to invest in the space, definitely.
The trust factor is a very important one. And again, I don't want to speak about Lehner investments, but in general, because we're doing an episode here about investing into digital assets or cryptos, so it should be a takeaway also for our viewers. It is very important, and especially in the digital asset space, my experience was that there are many companies out there which are just having a nice website, one-man show, and then they work from the kitchen table. So I think it's very important that you look at the company behind. How long are they there? Since when are they doing that? What's the background? Do they have real offices with real people? Are they regulated? It's a very important point. So those are really, I think, good takeaways for the viewers to really look who is providing you with a product. This is a very important point, especially in the digital asset space.
Oh, 100%. Laura, we've seen this so, like in our practice, we've seen this so many times. Like people come to us and say, like, should I invest in this crypto project? We're not even talking about big, investments, but like, that's like, okay, number one, do your due diligence. Is there someone behind it that has a face and a name? And there's so many rug pulls and things happening in the industry. It's crazy, right? So we're definitely seeing this as well. I see you not just banking on sort of the individual technologies, but I'm seeing you really banking on mega trends as well. And so making the sort of having this natural expansion basically of the actual value in that space. Is that a fair assessment?
That's absolutely correct. I think nobody would argue that the world is getting more and more digital. I think this is something without Lehner investments or us here, the world is going more and more digital. And we have those four components, as they always call them, which enhances results. The first is, of course, what's happening on the market, the information, the quality of information, the content of the information, the quantity and quality of information is getting bigger and bigger all the time. Secondly, of course, technology as such is getting better, which means faster internet lines, faster computers, more computing power. Third, of course, I can only speak in this case for us, but our own crew, we started with a handful of people. Today, we're a little bit more than 30 people, with having really 5-6 core people, data scientists, quants, PhDs like Dustin, for example. And last but not least, not to forget, which contributes a lot to this organic growth, which is not stoppable in my point of view, is the artificial intelligence as such. The computers are learning themselves 24/7, no matter if the sun is shining or raining or holiday or Christmas, they are learning all the time. So it's a natural growth and a natural improvement of what we are doing.
I'm a huge fan already, but I also have one more question before I let you do the last one. I have one for Dustin as well. It concerns value and valuation in the crypto space. And that's something that people are a lot of times they're confused about it. I mean, most notably, of course, with NFTs or Doge, like Dogecoin, meme coins, that seem to have like very little relationship with the markets themselves. But of course, they're still market driven. So how do you deal with that? Is that something you see on mathematically? Is that something you see in the numbers? Or more in the sentiment space? How does that compute for you?
Recently, in the crypto space, a lot of the people that have been in the space come from the traditional finance world. So we also try to use, I would say, the same type of techniques as valuation that we know, because they translate the knowledge that they had to the crypto space. And actually we have a word for it in the crypto space. We call it token economics. So it's basically token and economics at the same time. To give you an example, for example, in the traditional finance world, we use the P, price earning. It's very common to evaluate companies and to compare companies between each other. In the crypto world, how people would try to make some valuation, for example, they would take the market cap of a certain cryptocurrencies, and they would divide it by the transaction volume, for example. So that would give an idea of how much the crypto is worth compared to the activity on the network. And we know that the network effect is very important in crypto. So that's, for example, one example of how people try also to make a valuation. Obviously, people can't use, I would say, blindly this type of metrics. In the same way you wouldn't use, for example, the price earning to compare a value stock and a growth stock. We have the same issue on the crypto sphere, because like we talked about it earlier, cryptocurrencies actually behave very differently based on their utility. So you wouldn't use blindly like a metrics for a DeFi player like Aave or Uniswap and use it for Axie Infinity or the Sandbox in the metaverse, right? They are very different cryptocurrencies. So you really need to do a lot of work in terms of the tailor-made as well when you want to make some valuation, because they are also very specific to the different crypto sectors, I would say.
Very interesting. I think those new kinds of, that's a whole science in itself, those kind of new indicators that you're looking at. We're sometimes looking at projects, right? And then, one of the metrics that people can come up with is the intensity of the chat, like the intensity in, let's say, the Discord server or on Twitter. Not just how many followers do you have, how big the community is, but the actual intensity of interaction. And that can give you an idea of community adoption and stuff like that. So it's fascinating stuff.
I think token economics is not just about making some valuation, because the mimetic behavior is part also of this way of valuating cryptocurrencies. For example, when we talk about Dogecoin or some other coins, like you said, there's a community behind it. And the power of a community is not something that we can really price with some valuation like that, but we need to find a way on how to put a value on it, like you mentioned. And this is something that most people will use social media, like you said, because this is a good method on how to price how strong is the community, how much new, and it's something actually that we follow, how much new Twitter member they have on the account, what's the count of messages on for example, on Telegram, and etc. So the token economics, just to go back to the first question, is this valuation, and it takes very different shape based on the different crypto that you're looking at. In the mimetic memes coin, Dogecoin, they would be more probably based on social media value to extract. And from some other coins that works like more with the network effect and the Metcalfe flow, you would look at daily active addresses to get the valuation of how much the crypto is worth compared to the activity, for example.
What are your predictions for crypto in 2022, so for the rest of the year, and your last points, if there's anything you'd like to say about crypto before we close our conversation for today?
It's just a very fast moving and fascinating space. I mean, the landscape is changing constantly. And that's why we believe at Lena Investments that having this active management is a very important component. And working with on-chain data and AI at the same time in this environment is for us really a blessing. It's very, I would say, an untapped market for quant in crypto. And it tells a lot about how early we are in terms of adoption, I would say, both on the institutional side and on the retail side, which means that there will be a lot of opportunities for investment, generating alpha. And I think that's something that people should keep in mind if they're still wondering if they should invest or not.
Cryptos are here to stay. They will not disappear anymore. There will be a lot of volatility over the next years, but lots of profits will be made as well. That's the very good news, I think. And I think it's very important, as mentioned before, that you look with whom you invest, how you invest, investment fund, for example, regulated and diversified. And then not much can go wrong if you have a mid and long-term view.
Excellent points. Guys, I have to say, I mean, this was one of the liveliest and best conversations in this area that we've had in in a while. And believe us, we have many conversations. So I love that you have these different angles, these different aspects. Thank you for your time. Thank you also for bringing in your experts. I think that was an extremely high value add to have that as well. And I think for our viewers, it's important to understand that this is hard work, right? Like sometimes people believe, oh, crypto, you go on an app, you do a little bit of this and that. You read it, maybe a research paper or two, but this is really like it's like any other business, right? It's hard work, and building it up over years is actually what then kind of yields that kind of success. So thank you for sharing that with us. We know that there are going to be questions like last time, so we will try also to relate that to you and try and find a little bit of a way to communicate. If you want to invest with Liner, if you want to maybe work there, if you're a talented person who has a crazy new idea, we know that Liner is open to hearing that probably, and because there are drivers in the industry, it looks like to us, and ready to work with brilliant people, as it seems.
Yeah, wonderful. And yes, thank you again. And I think one of the really important points that we also addressed today was the power of community. And I think it's wonderful if we can bring some of our viewers together and just keep having these conversations. So thank you so much. It was such a pleasure. Yeah. And I'm sure we'll have you back.
Yeah, until next time.
Until next time.
Thank you so much.